All right, guys. This is basically the second part of our episode two, May 4th. Um, we thought we were gonna do review and then do a deep dive, but it took longer, so we kind of wanted to separate the deep dive as a video itself. So here we go. And same as always, we are not the financial advisors. This video is just for fun. All right, let's get it.
All right. So I chose the deep dive for this week to be first red days because we had a first red day, and it's a setup that does come up regularly, and it is a great setup. So without further ado, let's hop into that. And so what I'm going to do is let me first share. Great. Um, So, what I have here is four examples of first red days. The four charts in the middle are the intradays of the first of four different first red days, and the four charts on the extreme sides on the rights and lefts are the daily charts of those same ones. And so, for example, you have Mullen here on the daily, Mullen here on the intraday, and if you notice, the intradays for all of these consist of exactly 2 days. Um, right? We have the pre-market, the regular trading hour, the extended hours on the next day, the first red day, and then it's after hours, and sort of the same for everything else. And on AISP, we're of course talking about this day here. On air, we're of course talking about this day here. On VVPR, this day here. On Mullen, this day here. All right. So let's get it. Let's choose any one of these, right? Doesn't matter which. So let's talk about what is a first red day. Okay, let's use sort of AISP as an example. Boy, is this memorable, huh? To me and you. So what is a first red day? A first red day, speaking very broadly, is when a stock has been running substantially from lows to where it is nonstop. It could be a single day that it went from, say, in AISP's case, it went from $1 to $6 in a single day. That is hugely substantial, right? So a first red day is when something runs substantially and doesn't stop running until finally there's the day in which it's like, it's giving up. And the reason why it's called the first red day is because it could be just 2 days, like one ridiculous green day followed by more follow through into the second day and then a big dump. That's certainly how it usually is, but it could also be 3 days, 4 days, even 5 days. And 5 is the most I've seen. I don't really think from a price mechanic perspective it could even do more than that. That's remarkable as it is. But in any case, whether it's 2 days, like all of the four examples that I've shown here, which is 1 day, 2 day, 1 day, 2 day, 1 day, 2 day, 1 day, 2 day, right? Whether it's 2 days, 3 days, 4 days, 5 days, doesn't matter. What is common to all of them is that the last 2 days, whether it only consists of 2 days or more, the last 2 days are going to look like this. And what are we talking about here? So we're talking about something that whether it ran, like in AISP's case, whether it ran substantially from $1 to $6 here, or whether it has been doing that over the course of a few days, it's irrelevant. What's relevant is at some point it comes to a crescendo, to an absolute exhaustion, right? And then a little bit more. So the mechanics behind this are that it was a good short before. Like it was a good short somewhere. Like if we're taking a look at AISP as an example, it went from one to, to take AIR as an example. It went from, 50 cents up to $1.20. That's a double plus. So was it a good short here at $1.20? Absolutely, sure. like generally like from a more of a fundamental perspective. But because of price mechanic issues, usually intentional price mechanic issues, right? Riggers, manipulators that are, taking these obvious shorts and soaking them and then squeezing them out, it becomes what was already a good short here basically becomes a better short here. But you know, how do you survive that, right? So so, you know, what makes a first red day setup so great is that it takes a situation where it was already a good short, you know, like with all due, VVPR, it really illustrates this clear as day. This thing went from, let's see, from $1 to 750 over here on its day one. And was it a good short here at seven? Sure, of course it was. Still went higher, and so if you were short seven here, and you were too big, you were sized too big, then you didn't get the covers over here, you got blown up over here, right? And so a first red day is really, I don't know, I don't have anything prepared to explain it. All this is always off the cuff, but a first red day is something that ran so much before there was already a good short, but so many shorts were already involved in it because it was a good short. And whether the invisible hand was there to soak it or not doesn't matter. Usually it is the case. Now we have all of these shorts getting blown out, and at this point it's such a big blowout that there are no shorts left, most of the time. So at that point, it becomes a really, really great short. Now let's talk about what it looks like most of the time. Most of the time, it looks like, so you have VVPR is the difference, but I'll get to how it's different. But most of the times, what you have is a strong day one, right? Let's zoom in so we can see all four of these together. See this? So we have, um, there we go. So we have a strong day one, right? The dark is the regular trading hours, the gray is the extended trading hours. I hope we all know that. So we have a strong day one where could have been a good short here, and then it kept going, and then it kept going even further, right? Again, strong day one, could have been a good short here, could have been a good short here, could have been a good short here, but it kept going and even further. Again, A-R-E. Strong day one, could have been a good short here, still went further into the extended hours, right? VVPR is the different one in that it took, clearly the goal was to get this done anyway, but since they were really forcing it, so they took the smarter route where they let it fade and then squeezed out all the, this fade allowed shorts that were here to have the confidence to swing it. Shorts that were not involved yet were like, great, backside, and they all got blown out over here. So this was a more sophisticated way of achieving the same results, but nevertheless, still a first red day, right? Um, so um, so, from a mechanical perspective, it's really for the most part outside of this VVPR anomaly, and these anomalies do happen, but it's really just a stupid strong first day, followed by more into the extended hours. Now, where's the short on first red days? On first red days, the short is almost always, you're looking for two spots. You're looking for, I mean, really, 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 guys, just look at this. Look at this for a moment. Where was the high on this? Regardless of how they got there, because VVPR got there in a more circuitous way than these guys. These guys got there straight up, right? VVPR took the round way to get there. But regardless of how they took the way they look to get there, the short is always going to be, a few percentage over the highs from the strong day before. And by a few percentage, I mean 10%, 20%, 30%, 40% maybe. But we're talking about, we want to take out, and I mean take out, the shorts from the day before. That absolutely has to happen. So where do we take out the shorts from the day before? We got to go 10, 20, 30, 40% over the highs from the day before to make sure that wherever their stops are, they're gone. You know what I mean? And a lot of the times they don't try to do more than they need to do to get the shorts out. So, if you take a look at VVPR's example, it was, a clear out of these highs and back down, right? But in any case, again, where do you want to be short? So it's more of a question of when than where. So let's talk about the when, right? So the highs on these first red day setups tend to be pre-market. And if they are not pre-market, and like pre-market sort of gives you, like you can see on AISP, it was just punishing as much as it can punish in the low liquidity area of the pre-market. Same thing with AIRE. Same thing with Mullen, right? And so again, VVPR a bit of an anomaly, but like the when do you want to be short? Typically, you want to start into the pre-market highs, which is tough to gauge and dangerous, of course, because of the low liquidity. But it's that low liquidity that's causing such a ridiculous squeeze and for it to achieve such ridiculously elevated prices. And so just from a fact, from just look at all the first red days, you do want to either get involved in the pre-market or trade versus it in one manner or another. Because if we take a look at Mullen as an example, yeah, Mullen did really give you a good shot at those pre-markets in regular trading hours, but a lot of times they don't. Once the open comes, they sort of fail. And then what happens most times on first red days? People sort of end up holding their, DICK in their hands. They're like, oh, where's the pops? But why will there be pops? Like, yeah, right. You, a lot of the times, I know. You're not just you. So because you're like, well, where's the strength? And I'm like, well, there's no strength. They got blown out. The thing went from 1 to 10, and now you like we take AISP because AISP. I remember like I traded. I think I traded this first red day, and I think you were looking to trade it, and
Yeah.
and right, and so let's see if we can get one to focus on right AISP. So I can't even focus zoom it in like that. There we go. So AISP, let's put that in the focus. I gotta figure out how I'm doing this so that you can see it. Darn it! What the heck? All right, I can't. That's as zoomed in as I could do it. So with AISP, we were thinking first red day. Not only were we like me and you when we were here. Matter of fact, I'm starting to remember this very well now. We were absolutely. You were like, I think you were like more hesitant about it. You had less experience in first red days. I was like, bro, classic first red day. And not only did I say classic first red day, but I said, if we want to guess targets, and again, this is in the pre-market this time. I said, if we want to guess target, that $10 holler round number looks real pretty, right? And so we already have these ideas in our mind that it's first red day, and that $10 seems like sort of a round area that they might want to hit it to, considering where it already was at the time, which was at whatever this was, the sevens and 750s, and so we got the 980 push or whatever this was, 950, whatever, I can't see. The close to 10. It wasn't 10, it was close to 10. And we got that push into the pre-market and right into open. And now it failed. And you were really scared to short it here at 7 because the thing just went from 1 to 10. And so you're like, what if it goes from 7 to 14 now? I don't know that. But the thing is that on first red days, 7 is a short because it came from 1, not because it like whatever it could do, and it could do whatever it wants to do. And AISP particularly did have additional legs to it that most first red days don't. But on its first red day, it traded exactly like a first red day. And what happens on first red days, much of the time, right? You look at AIR, right? You look at VVPR, you don't get a second chance. There isn't that like the blow off was here. in pre-market or just, with a little bit of oomph off of open. Like Mullen is the one, sort of odd one out here that it did actually give you a second chance here, but most times they don't. And so you really just have to say to yourself, okay, a first red day setup is a first red day setup. If it was at 1 yesterday and went to 6 or 7 yesterday, and now today it went from 7 to 10 in the pre-market, which is that additional 30% that we talk about, then now 10, I'm thinking like a first red day, I'm betting the 10 is the top, you know? And so at $8 on AISP, I think it was, you were like scared to short the, like right here when the $8, once it failed from here to here, and you were like, I'm gonna wait for like a bounce for like a lower high that I could like catch a 9 versus a 10 and have my perfect risk reward. Sorry, you're not getting it, because this is a first red day setup. First red day setup have massive red candles to them, massive red candles. And so, the idea is no, it's not going to go from 10 back to 1. But you are going to get, if it went to 10, you should get fives on it. You know what I mean? Or something like that. Because the first red day candle is going to return at least half, around half the gains normally or something like that. And then, we could talk about what you might want to look at on a swing basis from there. That's a different story. But trading the first red day only itself, if it went from 1 to 10 essentially over a 2-day period, and now it blew off at 10, and now it's trading at 8 on low volume and low strength. Sorry, you can't wait for that perfect lower high. You got to trade the setup, and so you got to understand that weakness right here at 8 is exactly what you want to see. Like the fact that it cannot produce a lower high is exactly validating your first red day setup. So instead of waiting for something that is the perfect entry, you like more often than not, like, and I don't have data to back this up. I didn't search for too many first red days from the past, but I have seen I have no idea how many, like a huge amount. And more often than not, my feeling and recollection tells me that sometimes you get something nice like this, but like where you get that second pop, when you get that second pop, but most times you really don't. And AISP was charitable. It did give you those VWAP rejects. Air didn't even give you that. VVPR, same thing. Strength off of open, and then there is no lower highs. It's just a fade. And so I think there's two difficulties. First of all, that's the first red day setup, intraday on the first red day setup in a nutshell. And second of all, the two main difficulties in first red day setups are how to not get chopped up on it the day before, and B, how to time the entry on the day of. So let's talk about those two difficulties. So difficulty number one, if you got chopped up on the first red day, on the day before it, the really, really strong day, look, it happens. Fine, like it's sort of a long conversation to talk about how to not have that happen to you. And even myself, that still happens to me. It happens to me like very rarely. Like I would say like maybe 1 in every 10 first red day setups, I have to pay the tax the day before or something like that. But it still happens to me today. I still get got on these from time to time. So as far as recognizing them, for the most part, they tend to be. This is not always the case because AIR and MAL, for example, were not exactly the case of a really, really strong and visible hand coming the day before and laying up really, really great short traps on high volume and all that stuff. But like typically that is how first red days get set up, is by really like AISP, I think, is a really, really great example of that. Where it's on really high volume and there's a very, very great manipulator involved. And so when you see the signs of it should have died, and it didn't, and then it's doing the most classic short traps where it's a sub view up trap and then a swipe right back up, and again, all the places where it should have died and it didn't, but it's doing it on volume and it's doing it using an algo and it's doing it very, very sophisticated, those are signs for you that they are there and they are working it. And so those are the ones where you back off and you're like, okay, maybe you get along even, but at least you back off and you say, all right, I see you guys working. I see you guys working smart and strong. Let me see that blow off. And that's when you could be the dude who's like waiting for the first red day rather than being chopped up on the first red day on the day before that. Or again, even if you did get chopped up on the day before that, that's fine. Recognize what you're seeing and don't lose confidence for the next day for the first red day setup, which is the next thing that happens, right? Is either you got hurt on it and now you don't have the wherewithal to show up the next day and short it, which is again why it becomes such a great setup, is because people that shorted it yesterday are too scared to short it today. The ones that swing shorted this or stubborn, they got blown out. So there's not a lot of shorts left there. And without the shorts, where is this gonna go? Right? And so if you did get chopped up, don't worry about it. You still got to come back the next day. If it's the first red day setup, you got to trade it. It's the first red day setup. You know what I mean? And we've already discussed where/when to short this. So I think this is really bringing the whole thing full circle. Any questions?
Uh, I guess a couple things. Even like with my journey with first red day, this is the second setup that after day one gappers that I'm like, okay, I think I understand how the day one gappers works. Like, what is the first red day? And then we've been talking about like for a while. I also have a collection of these too, and now you put those like four of them, and I remember my process with each of them. Like ASV was really in the beginning. I was horrified from the first day. The way they were rigging, we were training together. We both get stopped, but I was so done with it. I'm like, they are really rigging this. And the next day, like we had that conversation, you got short. I'm like, I was so convinced this is like Black Swan, 10, 15, whatever. And then AIRE, I think I hit that one. That was okay. Mullen, Mullen was the first one that I actually decided to put size. And I'm like, okay, I think I'm getting it. I put that weakness in the open. And then I got
Yeah.
top tick on that,
On the cover?
that reclaim. And
Yeah,
then
yeah,
it
yeah, right here, right?
and then it did a huge stuff. I remember we were talking. That was the biggest volume candle of the day. I'm like, all right,
Yeah.
I'm gonna put it again. Like this is it. And then top tick again, and then fade. Um, but these are really good experiences. I really like this setup. Like I didn't feel bad on it. I think that's really when you feel like the trade was good. VVPR, I didn't do anything with it. I don't know why. I didn't think it was a first red day because of that gap down. Like it was gapping down, and all of a sudden we had that out of nowhere volume into the highs. I didn't know how to read that. I don't know if it's a first red day because first red day, like we talked, gap up, go more pre-market, and then flash into the open.
Right. So I do remember that, and you raise a great point. And let's talk about what's not a first red day. And so I do remember, you trading this, and I do remember you talking to me about this here. And I remember that I told you something. It might have been, I'm almost sure it was here. Correct me if I'm wrong, but I told you first red day, intraday, normally you just get weakness and weakness. Sometimes you'll get a pop, and that's fine. That's still a first red day. What's not a first red day is, let me even go really, really further here and say that on very, very rare cases, you even get a weak clear out of highs. So you could have gotten if you gotten a weak clear out of this level here or this level here, etc. You get a very, very weak clear out of highs. That is still a first red day setup. What's not a first red, but what's not a first red day setup? First of all, rarely does it even clear highs. So that's already like I'm stretching it by saying that it could do a weak clear out of highs, because most first red days, they don't have the strength to test highs. That's why I went into that rant about the weakness after the open flush. The first weakness after the open flush is really the best place, because they don't usually give you another opportunity after that. But sometimes they'll do something like this, which they still should have sometimes the strength to do that. What they, which is I'm looking at this high over here that it couldn't clear that high over here is what I'm looking at, right? And so, but on very, very, very rare cases, it can even very weakly clear highs. Now, where are we going with this? If it's very, very rare that it could even clear highs, then if it clears highs and then comes back down into wherever the highs are and tested its support, stays above it and starts to, in a very, contracted manner, stay there, consolidate, and then start to look upwards, this is not a first red day. Something else is happening here. So where I draw the line on when you show up to a day and you're asking yourself, I think this might be a first red day, then it like really it shouldn't test highs. It certainly shouldn't clear them and certainly shouldn't base over them, right? And so, but it could sometimes test highs and very, very rarely gently clear them and then fade. And so, if that helps you understand that the action that you are looking for is that the strength is already behind you on the left side, here, or here, or here, or here, right? Then and it's then that's what you're betting that's going to happen. And if the day starts and it starts to, it's giving you that weakness, and then whoop, that's not a first red day. So I hope.
Yeah, no, it helps. It's I think what I was imagining in my mind is I haven't really seen. Okay, it can break pre-market high, but once that weakness come into the open, I haven't really seen a lot. It reclaims and breaks high of the day too. So the way I was playing Milan was okay. It's weak. This shouldn't even take high of the day again. If it does, I'm gonna see what it does. So I wasn't really thinking because of the risk reward perspective, like risking all the way to uh, pre-market highs, but that was very rare case. I really barely saw if it breaks and it does a huge stuff with huge volume. That was the highest volume of the day, and then reclaims that again and then fails. Like I'm like, all
Right,
right,
and I can argue that the reason why that happened there is because there wasn't enough volume um, on on the previous action the day before and in the pre-market. Like a lot of times people associate first red day with the biggest movers. So like AISP, look at the volume. Like here's the first day, here was the first red day. Look at the volume that it did. It did, hundreds of millions in volume, and so there was real big shorts involved. And then it did a substantial, so here, right, the hundreds of millions of volumes, and then here it blew out all the big size, and so it just didn't have enough in the tank to really still blow anybody else out. There was nobody left to blow out. Whereas on Mullen, yeah, it did volume, but it did, 70 million. All right, not nothing, but not, that everyone's out for sure, that everyone's squeezed out for sure. So, there may be still participants on the short side that are fighting this, yourself included. Like what happened here is a bunch of other people just like you that still had the because this didn't blow trap and blow everyone out, and so there was still people that are trading this. So I was like, okay, let me just no disrespect, but like let me just clear out the weak hands and then do what I do, right? And so I could argue that it was the slightly insufficient volume prior to that allowed something like this to happen. But who really knows? I don't really know for sure. It's just the theory. Most importantly, is that they don't clear highs. They don't. You know.
um, what is a big volume for you? Like on a $1 to $5 stock does this thing starts at $1, gaps up to $7. Like how much volume?
100 million plus.
So if it
So
does 100 million plus in first third day, you are more confident people are
the
below.
day before the first red day.
Yeah, the day before that first day. So
Yeah.
second day you are more confident if that
Right.
huge volume. If it doesn't, you
Right.
you are expecting more fights. It can do
The
whatever.
higher over 100 million, the more conviction that everyone is out. The lower below 100 million, the less conviction. So you take Mullen as an example at the 70 something million, it's real close. So we still got our first red day, but there was a little bit left to work out.
Yeah, yeah, very, very, very nuances, very those small nuances. But no, I think it was a very
Right,
good.
and that nuance should also get you to question AIRE. if you take a close look at the volume there. But at the end of the day, price action is price action. So if you just get used to searching for up on the first day and then a lot up on the pre-market and then a topping action in pre-market, well, that's a first red day setup, and then the volume is I gotta tell you, man, I wouldn't have traded AIRE as a first red day, and I know that you did, and so and I wouldn't have traded it because of that volume profile, but I still saw that it's behaving like a first red day, and you saw it and you traded it, and it worked out. But yeah, the volume, like over 100 million, is when you know that they're getting blown out. Below 100 million, it's still a bit of a coin toss.
Wait. So you said on ARE because it did less volume, you wouldn't trade it as a first red day?
Correct, because the whole and that's not a criticism on the fact that you did, because
Oh yeah, I
you
know.
were
I was just
right.
wondering why you wouldn't.
Right. Because the idea behind the first red day is that everyone got blown out the day before and today into the pre-market. And when I see a big volume, then corresponding to a topping action, I believe it. When I see topping action without big volume preceding it, it's hard for me to believe it.
Okay, I'm having a hard time because I can't see the volume. Is it so little volume? Is that the why ARE? What is the
Yeah.
volume on the first
So
day?
AIRE, the volume on the first red on the first day was 26 million. 20,
Oh, that
like
guy.
30 million.
So you don't even
So
like that. That's so little volume.
exactly. So this is 30 million, and then on the first red day it was like 60 million. So it's not nothing, bro.
I see.
And it's just when we're talking about what's ideal, absolutely textbook. Yeah, 100 million plus.
Got it. Very good 2 points as far as the volume and what that can carry into the next day as far as the
Right,
expectation.
right. All right, I think that's it more or less. Before we, any questions, anything, any other thoughts, anything you want to clarify?
And I think we're living on a very good spot. 30 minutes, perfect. I think we are good to go.
All right.
All right, we'll see you guys next week.
Yes, sir. Can't wait.